All right, good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Happy Wednesday. And yeah, welcome to what should hopefully be another successful and profitable trading day. Yesterday, a little bit of a choppy session, right? Some up, some down, some good, some bad, some easy action, some challenging price action. And ultimately, right, yesterday was a good example over why losing small is such a key reason as to like why people are profitable traders, right? Or why they maintain that element of profitability. Regardless of how many kind of trades you have there, if you took that last trade of the day, it still should have been a green day, right? And ultimately, that's what we're looking to create for ourselves. We're looking for us to have that sort of margin for error. And once we have that margin for error, it's very easy for us to, yeah, basically make profitable decisions, right? And avoid feeling some of that general pressure. Now, with that being said, right, I do feel like maybe there's like a little bit of a disconnect here, maybe in the last week or so, as price action has gotten pretty choppy, pretty challenging, right, pretty bouncy, and want to make sure, right, that we're all constantly on the same page and just understanding that, hey, we're all in this together. It shouldn't be scenarios where I make money and you guys lose money. Shouldn't be scenarios where you guys are making money and I'm losing money. Generally, there should be a stronger kind of correlation, right, between those two things. And so that's something that I want to make sure that we're all always on the same page and that we're doing things here appropriately and with the sort of right intentions and with the right focuses. So, gotten a little bit of feedback here the last few days, and so just want to make sure that I'm going to be very clear, right, over what I'm doing for my stop losses, how I'm going to be managing my positions, what I'm going to be doing. And so I'm going to put a little bit more focus and emphasis into that here today so that there isn't any confusion or discrepancy. I'm just making sure that we're all on the same page and navigating some of these choppy conditions here appropriately. So that's sort of my commitment to you all here today. And I do appreciate the feedback. As yeah, sometimes I kind of lose my blinders. And yeah, I want to make sure that we're always kind of working well here as a team. Besides that, I'm expecting hopefully a relatively interesting trading day. We have a chance to finally get a breakout, maybe away from some of these ranges. Maybe not the breakouts to the upside that I was expecting, but certainly looks like we could be in really good shape here to maybe get like a resolution here of some of that we'll call it consolidation. And I'm hopeful that today, right, we get a nice bit of trending PA. Now, the size of today's gap up is maybe the largest kind of point of concern, right? We're seeing price action give us a relatively large overreaction gap up into a point of price action where we've seen basically sellers or resistance consistently defend these areas. So if I'm looking at kind of like PA, right, it's basically this blue line is like that wall of resistance, and we've not really been able to sustain any moves above, and we tend to hit it and sell off. Generally with a really big gap up, especially when there's like a few little earnings narratives across the board, I'm a big believer that maybe believer is not the right term, but statistically, right, gaps love to get filled within sort of the first 24 to 48 hours. So on those big gap up days, right, where it's kind of like an overreaction move higher without necessarily there being the volume support to indicate such a big move, it often does set up here nicely as like a potential mean reversion day, and a rejection or a reversal here off of that resistance zone certainly wouldn't be unexpected for us here this morning. And I want to make sure, right, that we are, I think just having a little bit of flexibility, right, to be able to trade things here in both directions, as I'm still not convinced that we do have sort of that trending PA. And I think that that's generally the story across the board, right? We're kind of getting still grinding type price action without things being particularly smooth and consistent. So what I want to find here this morning, right, is that basically easy trade. I've been talking about this here for a while, and I've yet to kind of find that scenario. So what I would like here, right, is to make sure that I'm identifying the basically easiest, smoothest, least stressful type opportunities, and then basically allow my technique to fill in all the other gaps. and not have to worry about things here or force things or do anything crazy. Again, um, I think it's really important that we don't lose the forest from the trees, right? Price action for the last little bit has been choppy. I think it puts everyone a little bit on edge. I think it's a little bit easier for us to drain our mental capital. There's a lot of narratives going on, right? There's a lot of geopolitical stuff going on. And I think all in all, right, that's created a kind of like a scenario of price action where things are incredibly frustrating, right? They're kind of really annoying, and it's easy, I think, to lose, maybe just a little bit of context, right, over how things have been behaving or kind of moving in the last couple weeks. And so that's fine, right? Markets are going to do that here to us. They're going to make us feel some of these insecurities, and they're going to put us in situations where, we're maybe starting to maybe not feel as good as we could. So our job here, right, is to basically survive until we can thrive again. And if that means that we got to just take our base hits, fine, so be it. But I'm not going to allow myself to kind of get greedy here, right? To get presumptuous and thinking that it's going to be a monster day or a monster win or a monster trade. It's going to just really be focused on, being technically proficient, right? Understanding why I'm taking trades, thinking backwards to finding my entry price, being disciplined, right, with how I'm managing risk. And once all those things kind of sync up and work together, it's going to continue to be okay. Although maybe like the P&L curve here hasn't been as aggressive over the last, say, 2 weeks, we're still kind of trucking along here, right? We're still making a little bit of steady progress. We're still seeing a little bit of some potential upside. So I don't have too much to complain about from that perspective. But it's not been easy. It has definitely felt like a period where I have to work for a living instead of allowing kind of trades to come to me. And so from that perspective, right, I would like to kind of filter back towards a kind of calmer, more relaxed, right, and repeatable approach. And I think in general, right, that's going to translate to everyone. And it's going to be a lot more clear and concise over why we're doing things, why we're making certain adjustments. And like I said, I'm going to do my very best to try to highlight those as well as I can and make sure that we're all on the same page here this morning. From an economic calendar perspective here today, it is definitely a little bit busier, right? We got a bunch of Fed speak here. Some started at 9 a.m. We got some more starting here at 9:30. And then we've got PMI at 9:45, home sales at 10, and then beige book and more Fed speak here later on in the afternoon. It's also Wednesday, right? So that should be crude oil inventories. I don't know why I couldn't find the term there. Yeah. So we got crude oil inventories here at 10:30. So again, a few things for us to kind of be aware of, and maybe by the looks of it here, kind of setting up to maybe be a day where we focus on the indexes and then hopefully go from there. How's the microphone? Everyone can hear me here this morning? Any issues, any concerns? We're all good? All right, perfect. So just a couple more days here of this temporary setup, and then we'll be back at it here with a normal office going pretty soon. So ES, let's kind of get after it here, right? What's the count on ES? How do we feel? What's the volume? Maybe tell us, and let's go from there. Yeah, so it's 3 for 3 here to the upside, a relatively big size move. And we'll talk about the VIX in a second, but it's a move here of about 3%, right, with a VIX reading of about 25. So we've had a larger overnight move than the implied daily volatility. That tells us two things, right? Maybe that the move here to the upside is going to be maybe the harder trade here, right? Because we have to get like a bit more of an outlier, bit of price action, and that's always kind of tough to bank on. Or, right, it also maybe tells us that, hey, this is a great place to take profit, right? Move your stops up if you're a bull. And so there might not be a tremendous amount of enthusiasm left here at these highs. to continue to push through towards, say, like that 5,500, right? That might be sort of a sticky point here for us. So it wouldn't be surprising to see price action kind of fail, maybe close in the middle of sort of this overnight range, or even look to fill that gap here to the downside. And so again, I want to maintain a kind of an element of flexibility here until I break out from this Wednesday range. So it's been a week of nothing PA effectively. And yeah, I want to see if I can get a breakout from there. Until I do, it's going to be it's going to be just consolidation, right? It's formal consolidation. With the size of this gap up, right, and the size of this overnight move, we are setting up here potentially for some of those mean reversion setups to the downside. And we want to make sure that we are getting the appropriate signals there and kind of trusting those bits of narratives before we get too aggressive. So again, if we do get one of those opportunities, I'm going to be looking at that on generally a longer time frame. So 10 minute, 15 minute, maybe even the 30, and we'll see if that sort of sets up. And then also, right, with PMI dropping at 9:45, it'll probably be a slightly slower start here to the AM instead of looking for an immediate trade there in that first 15 minutes. That next window from 9:45 to 10 a.m., that's going to be a little bit more tradable. The new home sales at 10 is not going to be a huge concern for me or from what I'm looking at. So maybe today's open just a little bit slower, but then kind of back to its usual self. And then again, right, we have we have the pre-market conditions to indicate that this could be a mean reversion day. And so we're going to basically the issue, right, with the mean reversion trade is you just don't want to rush it. You don't want to jump in too aggressively. You don't want to be too quick, right? You don't want to be like the fastest gun in the West here. So let's make sure, right, that if we do get any signals, we're waiting for kind of high levels of confirmation and then just not forcing it or rushing it, right, or doing something stupid. To the upside here, I'd be targeting a move towards 5,500, kind of like we talked about. So we're at 54.40, so I'll go like 54.60 as sort of my starting point here, because I believe that 54.50 is going to get taken care of effectively by my opening range breakout indicator. Okay, and then to the downside, again, like I said, basically looks like a mean reversion. Did not mean to dictionary that. So we'll call this right, and then we'll be targeting a move down towards sort of the pre-market lows of 53.70. Every day I feel like I'm changing these so aggressively. And then down towards like 5,300, I think that would make a little bit of sense. Okay, does it make sense here, team? Any questions about what this plan is? How do we feel? Good, not good? Makes sense in general? All right, sweet. And because, right, it's a 3 for 3 here to the upside, I'm not looking for an ORB play here to the downside, right? If I get bearish price action, I'm just going to be looking for that mean reversion scenario. That's really the only thing I'd be interested in here to the downside. So with the ORB, right, with that strategy, we're going to follow here, right, the 3 for 3 requirements and sort of the pre-market conditions. If we get that failed move and mean reversion, then I can start looking for that downside kind of PA. So for bull case, right, we're looking for either a breakout or a find support in the middle of that range and then push back towards highs. All right. NQ, similar, not so similar. How do we feel? I'm not sure what that button does. Yeah, same story, right? 3 for 3 here to the upside, non-outlier volume. So it's increasing volume, but it's not like spit in your face aggressive. Okay. And then to the upside here again, targeting a move towards like 19.4. So we're at 18.9 here. So we'll call that 19,000, right, as our starting point. And then like maybe go up towards, 19.4. And maybe we could push it to like 19.5, 19.6. Again, I'm a little bit hesitant on there being a tremendous amount of upside here, or like momentum left to generate that upside here today. Obviously, it doesn't mean that it can't happen, but what I want to do almost is like control my expectations of how much follow through there is going to be. I would rather set the bar really low and be surprised and not allow my greed to trick me into holding out for like a bigger move. So just because I've got, 500 points written down on my prep doesn't mean I'm going to smash through all of those levels here immediately. And kind of want to just set myself up, right? So it's easy to accept a smaller move instead of thinking that this thing is going to run forever. If it does, then the trade is going to show me signs of strength to indicate that I should continue holding on, or I'm going to get multiple cracks here at the apple where I can take a couple shots, right, to take advantage of a multi-point move. So again, I want to fight back against that greed here. I think that for me has been the most challenging thing to sort of manage over the last couple of weeks. Almost got like a little bit drunk on that volatility. And I mean that in a good way, right? It was like gluttonous with how we were trading, and we were getting a lot of really nice follow through and really good kind of consistency. And that transition away from getting those like really aggressive, mega fast moves to kind of like a little bit of a slower, choppier, more bouncy market. It's like a little bit of like anxiety, right? Like it feels a little bit uncomfortable. So I want to make sure, right, that I'm, again, really doubling down on fighting back against my greed and uncertainty and just really combat some of that anxiety by being more deliberate, specific, and having a better plan on how I want to manage my trades, both before I enter them, after I enter them, and how I manage both winners and losers. So the concept, right, effectively is finding my second trade, right, and defining my second trade before I place my first one. And if I can do all of those things, I think I'm going to continue to be just okay. We'll talk about a few techniques here to avoid kind of fake outs, right? I know there was a little bit of frustration about that there yesterday. So I've got a plan on how we're going to kind of attack that here today. So I'll walk you guys through that process once it's appropriate to do so. To the downside here again, right? Looking primarily just for that mean reversion, frickin' dictionary. Looking for that mean reversion scenario here. And that's pretty much it. Okay, CL, we've got crude oil inventories here at 10:30. Historically, not a day that I like to trade. So I'm just going to go NA on this and, not lose any sleep. Okay, make sense? Yes, no, maybe, hopefully. All right, great. So let's go through our leading names here quickly. So Apple, 3 for 3 here to the upside. Same thing like we have on the indexes. Big gap up, maybe not supported by that volume, or like the gap up seems disproportionate to the amount of volume that's supporting that move. Tesla, right? Big earnings jump here. It's funny how it works, right? Disappoints on the top and bottom line, underperforms, and then a gap up, right, of $12 or whatever it is. So kind of horrific, but that's why earnings are such a crapshoot. Again, 3 for 3 here. Okay. Microsoft. Ooh, not having the volume. So 2 out of 3 without volume. This is a great BB reversal scenario. Okay, we'll go AMD. 3 for 3, weak 3 for 3, right? Because it's a doji, so it's kind of like, I'm going to say high volume indecision. High volume is a relative term here. It's high relative to previous bar, not really relative to context, right, of what big volume is on AMD. Fine. NVIDIA, similar as Microsoft, right? Week 2 out of 3 without volume. Classic BB reversal setup. Okay, Amazon, 3 for 3 here to the upside. What am I missing? Netflix, 2 out of 3 without volume. But still outlier, right? So that's worth noting. And then Meta, again, 3 for 3 here to the upside, finally finding some support. And Google, last one. Okay, again, 3 for 3 here going into earnings. Is that today or is that tomorrow? Cool. Any questions here, team? How are we feeling? And like I said, right, VIX hanging out 25, spot 24. Good, guys, good. So here I'm going to talk about kind of how my plan is to manage my stop loss here in some of these choppy conditions. And I think this will be worth kind of talking about here for 2 or 3 minutes. I'll talk about this here as things are setting up, but let's kind of break it down. So I'm just going to reset this chart view. And let's just pretend, right, hypothetically, that I'm looking for let's say a reversal right off of this 2 o'clock candle, okay? And I want my stop loss to be, we're going to use the aggressive entry technique here. And we're just going to pretend it looks something like this, right? So stop loss 52, 77.50, right? Current price 5284. So difference here, right? $6 and or six and a half points. So a little bit aggressive, right? It's like $350 a contract, right? Give or take. So obviously that wouldn't be my entry zone, right? I'm still going to look to work backwards here. So normally I'd set it maybe 3 points above. So I'd be looking at like a 280 entry, right? The high of my confirmation candle is kind of my entry zone. So what this will mean, right, is that now I've got approximately 2.5 points of risk. Let's just call it 2 points of risk to keep it kind of conservative. That means that I'm risking about $100 per contract here, right? Just to keep the math simple. Means I could buy 5 contracts here in theory and still be within my max loss number. What I'm going to be doing here is kind of a twofold stop loss kind of logic, right? So what that means is that I'm going to be looking to get a discount relative to that blue line and applying that discount as like my buffer under my fake out spot. So I actually want my stop loss rate to be 278. So that keeps the number simple. It's 2 points, right? $100 a contract. So I'm going to size down. So I'm going to buy 1 less contract than I normally would. So we'll say I'm buying 4 contracts here, right, instead of 5. So that means I'm risking $400, and I'm going to apply that extra little buffer there as a kind of stop loss here underneath. So to make it less confusing, right, I'm going to buy a discount under this blue line, have a mental stop loss here at this 5278, and have a hard stop loss, right, that's going to be effectively a point lower or the difference, right, of what my discount is, and basically be at a hard dollar stop loss. So this should hopefully allow me to avoid some fake outs. It's going to allow me to survive some potential pullbacks, and I'm going to still stay within my max loss number. The con to this technique, right, is if I'm green right away, I'm going to be a little bit undersized relative to what I wanted to have been maybe on that initial purchase. But I would rather be in a trade that's too small than too big and have the chance to survive maybe some of that choppy price action. So to summarize, right, I'm going to have obviously same entry technique, right? Same entry logic. Look to identify my zone of resistance. And then from my entry zone, I'm going to have a mental stop loss here right at that red line, and then a hard stop loss at that minus $500 point. So it should allow me to survive some of the fake outs like we experienced here yesterday and that we've been seeing effectively for the last 7 or 8 days. And it's just going to give me an extra ounce of buffer. Now, ideally, right, if the price action doesn't behave the way that I want, I'll be closing my trade there, right, on a breakdown through under that 52.78. But it'll just give me a little bit more flexibility while still maintaining, basically my rules and my structure. So hopefully that makes a little bit of sense. That's going to be what I'm doing here until I start to see like a little bit of a proven otherwise. I apologize for not making that particularly clear there yesterday. But yeah, this is how I'm going to be managing my trades here. And I'll do my very best to kind of highlight what that actually is. From like an execution perspective, I'm just going to bring up a paper trading, right, feature. So let's say, right, that I'm entering a trade. It's going to be tick your stop loss, right? Set this as 500. And then ask, right, of 52.80. Right? And so that means that my stop loss would be whatever it is, right? And so if I get a discount, say I buy at 79, well, now my stop loss, right, hard stop loss would be at 52.7650, which is even just a little bit lower, right, than where it is. So it gives me just a little bit of a buffer. I'm still within that max loss, and I'm basically just applying the pullback I get onto the other end, right, of where my stop loss would be. But I'm filling in the dollar risk amount instead of the price amount here in the short term. And hopefully, right, that's going to help me survive some of the fake outs or things along those lines. Hopefully that makes a little bit of sense. Let me know if that makes, if you have any concerns with that. But that's really how I'm going to do it. And yeah, I'll obviously walk you guys through those examples or those scenarios if we get a trade here this morning. So that's really the objective here. That's sort of how I'm going to look at it. I'll do my best to highlight that as best as I can here in the moment. And if you guys have any questions about that or how I'm doing it or whatever it is, obviously, please do not hesitate to ask that question. It's better to ask it in the moment instead of sitting on it and allowing that confusion to turn into frustration. That's really what I want to avoid here as much as possible. And I think that'll help us all get back here on the same page. We know that price action has been very, very frustrating. So I don't want to exaggerate those feelings or emotions for everyone in here. And so if I'm not being clear about something, please call me out, guys, right? My job here is to help you guys make money. And if I'm not communicating effectively, then I'm not doing my job well. And I want you guys to all hold me here to that standard so that we can all do or accomplish sort of the objectives that we have for ourselves. So that's sort of the agreement that we have. I don't want there to be any like secrets or things like that belong between us, right? This only works if we have an honest and transparent relationship. And so if I'm not holding up my end of the bargain, please let me know. All right, so we got about a minute here till market open. I'm going to go make myself just a quick cup of coffee. I do have coffee here this morning, so you might hear high energy Mike again. Hopefully it doesn't conflict with Stoic Mike. But guys, we'll be back in just a minute, and we'll get after it here this morning and set ourselves up for a successful trading day. So if you have any questions, obviously pop them in the chat. We'll do my best to answer them upon returning. Otherwise, let's absolutely crush today's sessions. Have a lot of fun, and let's finish off the week here with an absolute bang. And let's get going here, guys. So back in a second, and we'll chat then. All right, team. So let's get after it here, right? Let's have ourselves a great day. And yeah, let's find a little bit of some nice PA that we can kind of fall in love with here. And then, yeah, go from there. Like always, right? We get paid for our decisions, not our time. So don't force anything. Don't rush anything, right? Don't get tunnel vision on price action. If we have to be patient, that's fine. I've got no problems with that. And yeah, hopefully we can kind of set ourselves up to really kind of kick off here and start compounding away here pretty aggressively. So any questions here this morning, team? How's everyone feeling? Everyone ready to go? I'm feeling optimistic, excited. All right, awesome. So let's see how the day shapes up, right? And then go from there. Again, we're expecting it to be a little bit of a slower start here to the AM because we've got data at was it 9:45, right? So in 13 minutes, and it's a red folder data, right? So expect it to be big impact. We'll see how that reflects in price action here this morning. But again, you can be a little bit more cautious, be a little bit more patient, right? And not going to force anything that isn't there. Already, if we're looking at the volume, really impressive volume relative to yesterday's open. So that's a very positive sign for us, right? If I'm yeah, looking at clues, right? It's a very, very impressive volume standard. So let's see if it basically maintains that level of enthusiasm here today. And yeah, we'll kind of go from there. All right, so far, right, probably not going to get increasing volume there on that second candle. Just fine, right? Totally expected. And yeah, we'll kind of go from there. Like I said, right, expecting there to probably be a little bit more of a higher probability of it being a mean reversion day here to the downside, right? That might be, if we see an aggressive bullish failure early, that's probably going to be our easiest kind of form of price action here today. So might have to be a little bit patient, right, to see some of those moves sort of develop and kind of work themselves out here this morning. Yeah, I'm not going to be interested in CL here in any capacity. Yeah, just because it has that data. So it just creates environments where I can get very easily sort of shaken up by an algo, and it's no fun. So um, yeah, I don't know if it's like paranoia to not trade CL on crude oil inventories day, but I've never really traded it within that context. So it's hard to teach an old dog new tricks type thing. Um, been saying this for a few months, but at some point here, I need to backtest and see if I have actually any reason to avoid CL on Wednesdays. Or maybe there's like a pattern that one could execute around that strategy, but I'm not quite there yet. Got a long list of homework here sometimes, unfortunately. Okay, so maybe starting to see some enthusiasm here to the downside. Not a huge range on NQ again. 51.5 points, not massive. If we just get rid of this for a second and bring this old baby up, right? Like the 10 min could set up, 15 min could set up. Again, if it sets up on the 10 min, I am going to have to wait for that 9:45 data, right? So yeah, just in general, going to be a slightly slower start here this AM. And that's fine. It gives me time to yeah, just to really settle in, right? And not basically reward like that feeling of needing to rush, right, to make money. Flips to the upside. Really impressive volume, actually. Interesting. And again, on this candle close, we're going to have 6 minutes until 9:45. It's maybe just enough time here for a look, but I've kind of hated how this price action has been moving in this 3 min candle. It's been like gigantic moves or like gigantic bounces and then stuck, right? So it's like getting caught up in the rafters a little bit. And it's got to, yeah, it's got to pull back still 75 points before I can look for an entry. Little bit intimidating. Yeah, it tells us probably that the volume is maybe a little bit one-sided. Yeah, so big funds, right? Yeah, big funds, big hedge funds, right? Big banks, they're going to have algorithms to basically execute their trades at like a much higher speed, right? So than we'll ever be able to take advantage of. And so when you see a lot of algo buying, right, on headlines, or a lot of volume, right, triggering here on headlines, it's generally algo based, where it's looking for a specific keyword or it's reacting to a specific price or whatever it might be. And so what those algos will do is they'll basically eat up every ounce of volume in search of the liquidity that they're looking for. And they're just going to basically wipe out the order book. And so they can do that here in either direction. And it kind of makes the price action like kind of temporarily unpredictable while it finds that sort of support, right? When they're purchasing trades within that context, they're not generally looking to manage stop losses, right, the same way that we do them, right? Low over confirmation candle or low over entry. Those same types of rules generally don't apply to algos on those news buying events. So that's where it kind of comes from. It just creates like just that extra layer of uncertainty, and that makes it hard to trust that level of price action. I mean, that's a disgusting second 5 minute candle. Like that type of high volume doji, that's literally what haunts my dreams. It's the boogeyman. So I always say, right, the worst decision is high volume indecision. And that's kind of what we have here going into this data. So again, feel pretty vindicated in being patient here or being relaxed. And we'll see if that changes at any point. I think what's been really challenging, I think, about this price action here recently is you had a really nice period of PA where it was like very rewarding to the ego, right? Because you're constantly getting those big moves, you're getting that thrill. It's exciting to have been trading, right? During that big market sell-off or those periods of volatility where we're getting like literally 100 points in a second. These most recent couple days, we'll call it last week or so of price action, it's like punished those emotional attachments, right? Or those like ego-based decisions. So it's tough, right? The market rewarded it in one hand, and then it's punishing it aggressively here the next week. So just transitioning to that, right? Forcing ourselves to effectively have that ego death. It's not something that's particularly easy here this morning. And I think that's where a lot of that frustration comes from, right? To be honest with you, Tom, institutional traders do not care about retail investors here in general because we don't like our position sizing and our liquidity is not nearly enough for them to make any money off of. So like this, when I hear people talking about like, oh, market makers were hunting my stop or things along those lines, in my experience, I generally think that those types of beliefs are mostly like fugazi. Like I don't really believe them to be true because if a market maker hunts my stop, okay, and they take $500 off of me, that doesn't even come close to paying the commission that they need to pay to execute that trade. So it's not like a winning proposition for them. So they're not really they're not thinking about us, right? It's that Mad Men meme where he's like, I literally don't think of you at all. It's a bit more like that than I think people give it credit to. So they're not making decisions there. If anything, they may be like so. What I have seen, right, is if a fund will identify fugazi, it's like bullshit. Um, what they will do, right, is they'll be looking out for other big market orders that they might be able to tie to a certain fund, for example, right? So there'll be signals. Well, there'll be like a Millennium, for example. They'll have some crude algorithm that isn't hiding their volume very well, and they can see where it's being routed from and all these sort of stuff. And so they'll maybe set up signals where they'll look to basically overwhelm that volume because now all of a sudden it's worth it, right? And their orders are uniform, and they can kind of take advantage of that and actually make some edge off of that. But the liquidity that us retail traders are basically executing with is just not enough to move the needle for a fund. Like the company I used to work for, they paid at minimum like $30 million in commissions each month, right? So you need a tremendous amount of retail buyers to be able to cover that fee. And I don't think that there's enough liquidity in the market from retail to accomplish those objectives. And yeah, I would agree here right now, Robert. Pretty untradeable price action here so far. So it's worth being patient for now. Retail is like maybe 2% of all market volume, maybe even less. And especially in the prop firm world, right? because these orders, the vast majority of them are not going live to market, right? They're being executed internally. So that again, right? It caps the volume that actually approaches the market. Yeah, a lot of sales going on here at the moment. Apex, I think their 90% off expires here today. So yeah, if you want to get 30, 300K accounts or whatever the limit is, 20, 300K accounts, this will be the cheapest time you can ever do it. And then like $50 resets, not to encourage this type of behavior, but if you wanted to just go long one, short one, right, effectively, or just go like all in on 5 trades and see if one can get you funded. I mean, this is definitely the price cap where it's reasonable to do so. Again, not a recommended technique or something that I would encourage anyone to do. But if your objective is to gamify prop firms and to basically, it's like when like gamblers, I was watching a documentary about profitable sports gambling a couple months ago. And it was basically saying that this guy can only make money because he is gamifying, right? The bonuses that like FanDuel and DraftKings and all these companies are kind of giving out. And so he's able to take basically two sides of a coin and basically arbitrage it. The price of which you're getting a eval account right now with Apex, it creates a scenario where you could arbitrage and guarantee you pass. Now, not a scenario where you'd be guaranteed to get a payout. You'd still have to get, those consistency rules and all that kind of fun stuff, which is why I don't recommend it, right? If you're gamifying just to pass accounts, that's cool, but that technique doesn't work in basically maintaining payouts or getting to a payout stage. But, I mean, they make them cheap for a reason, right? So yeah, so far so slow here. And basically now looking right for a breakout past high of day. And then can go from there. Yeah, so generally, Steve, my preference is Top Step. I think that it's better for payouts. I don't currently have any active Apex accounts, but just talking about, yeah, because of their discount, right, it does make it appealing if your objective is to purchase multiple accounts. But no, I do prefer Top Step over Apex. Now, if Top Step starts to apply their consistency rule, right, to funded accounts, we might have a different kind of conversation. But yeah, just sort of commenting on the recent discount. Not a formal recommendation for everyone to switch over to Apex. I don't think that's necessarily the best move. Close. Yeah, for now, Charles. Yeah, there's a lot of talk of that potentially changing. So yeah, pretty slow here at these highs. Pretty slow. So for my West Coast traders, do you guys have any tips for me or advice for me on how to survive these upcoming wake ups? So we'll say that's it's making me a little bit nervous. Yeah, I don't know if there's enough coffee in the world to make five o'clock look appealing. So not to be well, I already wake up pretty early. I wake up pretty early, but I'm gonna have less time between when I wake up to when I start the stream. You guys might start seeing the stream link get posted just a little bit later than it's like 7:30. Yeah, Cole, moving out west on Friday, starting to move. I'm still gonna be in Canada, Joey, unfortunately. Okay, so finally starting to get our first opportunity at maybe like a rejection thesis. Oh no, I've been in Montreal for a while. I've been in Montreal 4 years, maybe five. I'm not very good at remembering these things. Yeah, I'll be moving to Whistler. Yeah, moving to Whistler. I grew up in Vancouver, south of Vancouver, in a town called White Rock. So I've been a West Coast kid my whole life, and then went to the UK, did my tour of duty there, got kicked out after Brexit, and committed to being East Coast for a while. But eh, I'm tired of it. Tired of the winter and not being near any fun outdoor activities. Yeah, my dad lives out west. He lives in like small town British Columbia in a place called Princeton. He's got like 200 acres out there without any internet. So the only way to reach my dad is through Perrier Pigeon, and then my sister's in Calgary. So it'll be nice to be a little bit closer to everyone. Yeah, there's not a tremendous amount of enthusiasm here at these highs yet, right? It's kind of been a bit of a grind inside that doji. And price action consolidated for just long enough to kind of kill any mean reversion ideas. Maybe you can get one on the 15. I don't think we'll get one on the 10. So again, just slowing things down here just enough, right, to be annoying. Oh yeah, I can't wait, Cole. I was saying this a couple weeks ago, but when I was a kid, I used to race mountain bikes a lot. and do a bunch of like dirt jumping and stuff like that. And every summer from about I don't know, maybe 14 to 18, I always like broke my ankle or my collarbone or my wrist or something like that biking in Whistler. So at some point here, we'll be doing a stream from the clinic as I'm getting my X-rays. I mean, closer to Kelowna than I am now. I think it'll probably still be like a 6 hour drive. Kelowna's great, especially in the summer. It's epic. In the summer, yeah. I mean, the Okanagan is so underrated. It's such a beautiful part of Canada. And the wine country there, ooh boy. Oh, you want to go do some wine tours? You want to feel classy drinking wine at 10 a.m.? There's almost no better place in the world. It's incredible. If you ever want to meet some hockey players, go to like yeah, the Okanagan in July and August, and just have lunch or dinner at one of the wineries, and I'm sure you'll see someone. Yeah, so far so choppy, right? We kind of knew that this was coming, so okay, pretty good from that interpretation. Just a gap up, right? That's larger than the implied daily volatility. It's always going to slow things down. So yeah, so far so slow here. Ooh, interesting. A little bit of algo selling there, right at the candles open. So you see how like at that 10 a.m. data, right? It faked out down towards the opening range and then basically rocket shipped up. That was algos effectively just destroying the order book or whatever orders were hanging. Now that doesn't mean that's going to be pure continuation, but the volume that it needs to execute its trades can just wipe out the order book, right? Retail doesn't really have that ability, or no like individual retail trader really has that ability, whereas a big fund or a big institution or a big market maker can. And so that's I don't want to call that manipulation, but that's what people would view it as potentially. But for me, it's just them hunting liquidity. And when the historically, right, companies will pull orders. Most traders will pull orders going into big earnings events, right? And so there's a speed advantage to using an algorithm there because then the second the headline drops, right, the first person that gets in effectively gets like a first crack at it. And so there's a lot of stuff that gets set up, right, to basically speed up your execution, to make sure that you're getting a better fill or you're getting better data or whatever it might be. So that's really why it has to be algo based. A human can't make that interpretation and execution in the same speed that an algorithm can. So it'll be looking for a specific data point or whatever, and then it'll just dominate basically a relatively empty order book and be able to dictate flow for a short period of time. And it really could be as simple as buying here, right, at 19,000 and then selling at 19,150, and basically just, if you're first, right, you can then sell into all the other like domino orders that come in that chase that volume, right? So to a certain extent, that's maybe what we just saw there. But yeah, this is a boring, a very, very boring open. Makes me wonder how the heck I had 6 trades yesterday. It's like put all the price action into one day. Cheers. Well, yesterday's open, if I'm thinking back to it, Herschel, was pretty frustrating, right? Like our first couple trades there yesterday were shakeout moves. And today we've kind of seen that, but then we've not seen the upside follow through post shakeout. So that's probably the main difference here. And even if we had if we even had the flexibility to trade the ORB here to the downside, and those would have been losing trades. So all things considered, I think we did a really good job here planning out our position and just avoiding relatively obvious mistakes. And so again, right, that for me is a big key. So yeah, for now, still being pretty patient, still being pretty cautious, not seeing many reasons to be aggressive yet. And yeah, I think it's a good reminder here now, or a good time to remind ourselves, right, that I'm not for me, I think having a good trading psychology or having a good trading mentality starts with gratitude, right? More than anything else. I'm fundamentally grateful that, hey, I get to sit and watch this, right? Even though I'm watching paint dry here right now. But that, hey, this is what I get to spend my time doing. This is a choice that I'm doing. And I'm very grateful that this is the sort of opportunity I have for myself. The results, right? I'm not looking to judge myself based on that on a day-to-day basis, even a multi-day basis. I'm trying to judge myself here on a week-to-week, month-to-month, right, quarter-to-quarter, even year-to-year type trading. And I think it's easier to remain patient and deliberate and structured and kind of relaxed, right? The more gratitude I kind of express, right, and the more gratitude that I share. So, like always, right, I just want to say thank you to everyone for tuning in. I appreciate all of you guys watching. I appreciate you guys all being a member of the team. And if I don't get another trade here, I don't get another setup here today, or I don't get a look, doesn't change anything for me. I'm still incredibly excited that I get to share this experience with you all. And I see no reason why that would change, regardless of the outcome. So that foundation, right? I think of just always keeping yourself present and calm and cool and collected ultimately makes you way more money than pulling your hair out and trying to trade one up, one down price action. Obviously, doesn't mean that I'm walking away here, anything along those lines. But just trying to force myself, right, to slow down, right, to not be super aggressive, to not rush anything, to not feel like I'm owed anything, because all of those like self-imposed beliefs generally just trick me into making decisions that I don't want to make anyway, and that's way less fun. Yeah, Houston would be cool if my visa ever gets figured out. Texas would definitely be an option. I got a really good friend, actually buddy that I worked with institutionally, who lives in Austin, and yeah, he's constantly putting the hard press on me for coming down to Texas. Yeah, maybe we're finding a little bit of resistance right at that 5,500, and then selling off, but nothing here as of yet for me to be able to trade. Yeah, Washington State's beautiful. Like the town I grew up in, right? It's called White Rock, and it's right on the border with, I guess, Bellingham. And I spent so much time in Bellingham as a kid, just like always getting my gas there and stuff like that. It's great, beautiful spot. Those temperate rainforests that you get in the Pacific Northwest are so hard to beat. You feel like you're walking through like a foggy day, walking through those forests. You feel like you're in some like in a movie. It's so beautiful. So for someone who likes to run in the mountains or run outside and to bike and he's got an active dog, for me it's probably the most appealing place in Canada. uh, just reminding me of some like yeah, some trips I did with my buddies. We used to do these things called culture trips, and it'd be once a summer, especially when we all came back from Australia or from university, and we're all meeting up, haven't seen each other for a few months. We would do these American culture trips, and the goal would be to basically drive across the border and hit like every fast food spot that you don't get in Canada, eat like 6,000 calories, and then come back. Oh, Roberto, Australia would be epic, but I'm not sure if I want to be that far from my family. I want to be far enough where they can't visit easily, but close enough where I can see my dad before he gets too old. Cannot believe this range since 940. This is disgusting. Two story time days in a week. I'm going to start repeating myself. Cool. I've got a miniature Australian Shepherd named Ricky. He's my best little buddy. He's the best. And he turns 7 in a couple months. So he's been a good boy. Yeah, they're the best, right, Robert? They're so loyal. They're such fun dogs. Like I think rest of my life I'm only going to have Australian Shepherds. Yeah, this is the fear, right, with CL on crude oil inventories day. That is a fuck you candle. Oof. So again, right, our most likely setup trigger here at the short term is a breakout over high of day on increasing outlier volume. That's effectively what we're looking for here right now. We've seen rejections fail, right? So we've seen two attempts, right, to basically sell off here from these highs, not really sustained lower. Now, it hasn't been like a perfect failure because bulls haven't now reclaimed those highs, but the onus or the impetus is now back on bulls to be able to reclaim control. So we've seen bears fail here now twice in their attempts to reclaim control, and then they've not been able to sustain that movement here yet. Yeah, that is some flush there on CL. After a 3 for 3. Yeah, that's not nice. Not nice to be on the wrong side of that. I honestly can't get over this range. Wow. Buck 45 in 5 minutes. That's a crazy move. Someone's positioning for the data. That's what that is. Anyone here use a standing desk? Anyone a standing desk trader? Do you guys like it? Yeah? Big fans? Nice. And do you find the motor to be powerful enough to like lift all your monitors and stuff? So I will say I kind of like the idea of having a standing desk. I feel very um I feel clear when I can like walk around or like pace a little bit. Nice, Joey. Okay, something to look into. See, it'd be great to get a big desk, big standing desk. That'd be nice. Nice. Okay, guys, I appreciate that. It's good feedback. Maybe a quick little IKEA purchase. Okay, maybe our first opportunity here now at separation away from these highs. Maybe. Again, here's the problem though, right? We've got price action getting stuck here and price action getting stuck here. So between kind of those two blue lines, right? So if I'm going to be looking for a reversal setup, I'm targeting that initial blue line here, which isn't a ton of space. Sounds good, yeah. I don't mind spending some money on a nice office setup. I haven't traded gold here, Deb. I've said this before. I honestly just haven't back tested it to see how my strategy would execute on it. For lack of a better term, I don't have a tremendous amount of incentive to trade it. I do feel like I get plenty of daily opportunities, and I don't feel like I need more action. So there's like a little bit of like survivorship bias over why I don't trade it. I've been trading US equities basically my entire career, minus like a year trading Forex. So I'm like a little bit, for lack of a term, maybe stubborn, right, in trading what I know. And just the work, whoops, and just the work, right, of back testing something, it's a lot. It takes me a long time. So that's something that, yeah, I'm not super incentivized to do, to be honest with you. Even there's like mean reversion technique that we've been doing, right? It goes, we've been spent 2 weeks back testing. And now it's been kind of like a month of stress testing it. So all things considered, right, it's only going to take me 3 months to kind of iron out all the kinks there. And yeah, it's daunting to to go through that process consistently. So yeah, it's not that I'm fundamentally opposed to trading gold. I'll trade any asset class, but I need to have a reason to deviate away from what I'm doing, and I don't have the incentive to do that work yet. Maybe not the best answer, but yeah. I don't know. Do you guys feel like we don't get enough trades? And maybe maybe not the right day to ask when it's like the slowest bit of price action we've seen in a while, but we get plenty, right? Yeah. This time last year, maybe a little bit earlier, it was a little bit slower, but made those changes. The thing about the market, right, is there's always something that moves more than the something that you're looking at. So it's super easy to like chase the golden goose, especially when gold has been like in squeeze mode for the last little bit. Yeah, so I don't know if that's true to be honest with you, Aj, right? I don't know if gold is less or more, like, which is why I would need to backtest, right? Because that right now is like it's a feeling. It's not necessarily supported by any evidence. So it's like everything looks good, right? Until you can look under the hood. I'm I don't generally subscribe to the theory that one ticker is less choppy than the other because I think human psychology it's pretty constant across asset classes, right? The it's not like bond traders are less nervy or less emotional than index traders or crypto traders. So I'm not sure if you'd see different intricacies would make a difference. But yeah, I think that's the point, right? It's like gold has been in a big squeeze, and there's been some massive monster moves. So yeah, always right. It'd be great to catch those, but kind of an outlier scenario. And last maybe not the last 10 days, but the preceding 90 before that, it's been really really good action for us. Lots of follow through. You know what I think there's a really easy or a big temptation with traders in general, and I don't mean this specifically about anyone here in the group, and I think it's just in general with like life, right? But it's easier to do something new than it is to do something better. So I don't think new is necessarily more profitable. I think it's like a little short term dopamine hit that makes you feel as if you're still achieving progress, but it's like just catching up to where you were before instead of compounding skills and improving. So Alex Ramosi kind of put that thought in my brain, where he's like most people just need to do better, not new. Where most business owners, and I think this applies to trading because trading is a business, is that they want to do new instead of better. They want to find the flashy new, can't miss, can't lose, can't whatever, instead of fixing their process, fixing their technique so that it's a can't lose. Man, what a snooze so far. I'll be, I guess, transparent here, right? My only, or the way that I'd be looking to trade here gold right now, and I'd say this for silver as well, is I would just be interested in buying solid gold bars, right, or solid silver bars, putting them in a safe somewhere, right, and holding them on. So yeah, Deb, for sure. With Top Step or any of those accounts in general, right? Pretty much any amount of drawdown is survivable if your position sizing is good. If you're going 15 contracts on a trade, then no, you don't have enough drawdown to survive your worst choppy days. But if it takes $4,500 to lose your account, you could do would it be 9 losing trades in a row before you lost your account? I mean, it's pretty hard to have 9 losers in a row. Obviously, just jinxed myself into now having a 9 losing trade streak, but um, that's really the reality, right? If you're responsible with your position sizing and you're not over leveraging, then all of these accounts have more than enough drawdown to survive a worst case scenario day. But you have to make your worst case scenario significantly less than what your total drawdown is, right? I even think in general, right, you should pretty much never be at a point where even getting locked out from a daily limit perspective. From like if that's what's occurring, then you're probably still sizing your positions too aggressively to be able to survive any kind of period of kind of challenging PA. Yeah, 100% Marcus, right? You fall for the girl in the red dress. So if you want to survive the worst choppy days, it's got nothing to do really with what account size you choose to trade. It's got everything to do with your position sizing and how you choose to manage your risk from that perspective, right? Because to lose 3K on a day, you either have to break a rule pretty tremendously, right? So either ignore a stop loss, average down, make a bad decision, yada, 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 right? Or you got to have 6 losing trades in a row in a single day. That's pretty hard to do. So really, I think the question should be phrased differently. It's how can I size my positions or how can I manage my risk so that I can survive worse choppy days instead of buying yourself more buffer and hoping that you can survive bigger losses. It should be doing the opposite of that, right? How can I buy deeper pullbacks? How can I trade micros instead of minis? Or how can I do XYZ to ensure that blowing up is impossible? Everything starts from that foundation first and then can go from there. No, I would never do that, Matt. One of my favorite quotes is oh, what's his name? Why can't I remember his name? But he's got a picture in his office, and it's only losers add to losers. So size down, Deb, right? That means your position sizing is causing you anxiety, and the numbers are making you emotional. So that's got nothing to do with drawdown. That's got everything to do with your position sizing. You have to build up your tolerance to being able to see moves happen dramatically. But no, to answer your question, Matt, I don't add to losers. I want to add to winners. That for me is where I can make a lot more money. Generally, when I'm adding to losers, I'm admitting to myself here that either my entry timing wasn't correct and hoping, right? Hey, sounds good, Abraham. Have a great day, man. Yeah, you have to build up your tolerance to trading big sizing, right? And everyone has a number that puts them over the edge or puts them in the scenario where they're no longer like a rational human being. So the smaller that you can keep that number before you tease yourself with that irrational brain, then yeah, you'll survive the choppiest and worst case scenarios But if your position sizing is too big and you're being too aggressive with how much you're risking, then every move is going to create more anxiety. And yeah, you're going to get the worst of your strategy because you're going to just consistently make mistakes. So you have to build up that tolerance to increase your sizing. So in my opinion, right, I say this all the time, but risk management is proactive, not reactive, right? So if I want to avoid mistakes, I have to basically make trades where I can remain objective. And if I start to get like that panicky feeling or cutting trades too early before it runs or whatever it is, then generally I'm putting myself in a situation where my position sizing is dictating my feeling, not price action from my setup. Yeah, Matt, if a trade is strong, I will always get another chance to enter a position. But one of my big beliefs here as a trader is that if my entry timing here isn't correct, right, and I need to average down into my trade, well, if my entry wasn't green and it didn't start to move from the point where I expected it to move, what else am I wrong about, right? If I didn't get my entry correct and my timing wasn't reasonable, then why would I admit then that my thesis is also still bang on, right? Because if it was bang on, it would have moved when I expected it to. So in general, my strongest trades or my best trades, I'm pretty much green right away, and they never really retest and go. So if my entry timing isn't good, go from there. Now, Alan, I am looking for trades, but just the range that we have here on the indexes isn't particularly appropriate for me to be executing trades on. So for now, I'm looking for a breakout and hold above high of day on increasing outlier volume. And until I get that scenario, I have to sit on hand because I'm basically just being told that price action is range bound. So yeah, I am looking for trades. I am looking for action, but I'm not getting any appropriate market conditions to indicate that I need to be aggressive. I hear that, Derek. It's like the thing that we did institutionally, right? 'Cause, like I said, I was trading $40 million positions. So, that was a tremendous amount of anxiety, and it took me a long time to basically get over what that number meant. And so the way that we did it is we started calling, or not started, they were doing this before I ever joined, but they would talk about your position sizing in units, right? And P&L in units. So you're never saying, oh, I made $1 million on this trade. I made 1.3 units, or I made 1.4 units, or whatever it was. And so keeping those numbers really small and keeping those numbers kind of like reasonable made it a lot easier to maintain that objective sensation, right, in our positions. Because otherwise, right, you'd be freaking out over each 1 million, 2 million, $5 million move, and you just lose your ability to maintain objectivity. So, okay, increasing volume there on a breakout, not increasing outlier. So I have to wait. Same thing, increasing but not outlier. So again, have to wait. No indication of really strong PA here yet. Look, I would, in general, right, I would suggest that for 95% of your trading problems, you're going to solve them a lot faster by trading at a size that you think is insulting to your bank account, right? Where it literally feels like you're picking at pennies because you're going to be so detached from the outcome. The outcome won't matter. They'll actually be able to become objective. And once you turn that into a muscle memory, right? Once you build up those good habits, then scaling up your position sizing is easier because you have that proof of concept and you have a technique that you can kind of fall back on when shit hits the fan. So for me, I think that's like it's the easiest way to solve your trading problems is to size down significantly and buy yourself enough time to fix your issues. oversizing your trades, going, huge risk on each individual position, all that's going to do is it's going to punish you disproportionately for each mistake that you make. Right? Because then not only do you have the crappy feeling of having a losing trade, but then you have the crappy feeling of blowing your evaluation account and having to start back from square one. And we want to avoid those sensations, right? Because then that becomes really demoralizing and it starts to hide from us, right? The things that are actually preventing us from being profitable. It just becomes like a general statement, right? Oh, my strategy isn't good enough, or oh, my take profits aren't good enough, or oh, this, or oh, that. And you're never able to create effectively like that proof of concept for yourself to be able to survive. Yeah, I like that as an idea, Mike, right? Um, it's a similar concept to thinking in units because I think it's really hard for us to scale when we're thinking that, oh, I need to make $500 here today for it to be a good day, or oh, if I lose $1,500, it's a bad day or whatever. I think when we think in dollars and cents, it's really hard to get off of that P&L roller coaster. And once you're on that P&L roller coaster, you make decisions based on P&L, not based on process, because you're chasing the thrill, right, of either a win or a loss. Like there's, to a certain extent, there's something exciting about taking a big losing trade. Like it feels like a lot, right? It triggers a tremendous amount of emotions. It triggers a tremendous amount of feeling. And that in itself could be like a reward um for making a decision, right? You can get addicted to that feeling, I think. And so the sooner you can detach yourself from the P&L and think in processes, think in techniques, think in whatever, then you'll scale up your P&L much faster than if you do something else. So yeah, my general advice to everyone, think of what your max loss number should be, cut it in half, and you're going to feel so much calmer for when you're trading. And once you're calmer, you're going to be able to execute these ideas with less errors effectively. And once you have that process right in place, then even those small wins are going to compound a lot faster than those like hypothetical monster wins that then get given up right when you have a monster down day. So yeah, in general, I think 99% of trading problems can be fixed by fixing your position sizing to a point where you can remain objective. And the sooner you can basically put your ego aside and stop thinking, oh, I'm good enough to trade 5 micros, or I'm good enough to trade 5 minis, or I'm good enough to trade a $5,000 risk, and you don't attach your self-worth to that, the easier it is to make money. I'm a really big believer in that, really big believer in that. Does that kind of make sense? Right? Like 1% a day doubles your account every 72 days, right? Approximately. So you trade small, you go for small sizing, you'll double your account 3 times in a year. That's huge, right? Like that's huge P&L. So you do that for a couple years, you're never going to have to worry about your bills ever again. So the more you can delay your gratification, the more you can slow things down, the more that you can default into focusing on your process, the more money you will make, even though it feels counterintuitive. Right? I've said this before. I will say it again, but my biggest edge as a trader isn't my strategy, right? Strategies come and go, but my biggest edge is my ability to lose small and to lose in control. Yeah, 100%, Tom. Yeah. That attaching your ego to your P&L makes it impossible to accept a red day, which means that you're going to trade really, really well until you make a mistake. And then all of a sudden, it kind of just blows up in your face. Right? And you start to take trades that you know you shouldn't take just because you want to feel the relief of not being a loser, right? Or whatever the emotional attachment you have with it. But it's the consistent gambling and needing that validation every single day that actually ensures you're going to be a losing trader. So, yeah. Again, one of my favorite sayings is that what feels best for my account in the moment is rarely what's best for it long term. And if I can start, or if I can prevent myself from feeling as if I have to take trades to make a P&L, then the more likely I am to make decisions that actually work out for me over a long sample size. And unfortunately, right, this is one of those things where everyone has like their own little unique formula, right? And some people are going to react differently to losing $1,000. Some people are going to lose their mind, right? Losing $100. So it's going to be different for everyone. And so that process, right, is one that you have to be extremely selfish about and one where you can't lie to yourself over what your tolerance is. I mean, I'm dipping into my entire bag of cliches here today, but trading is one of those games, right, where I can lie to everyone but myself if I want to be successful. So if I constantly tell myself, right, that, hey, this isn't actually a problem, or hey, oh, I'm better at managing risk than I think, or that, oh, like my strategy doesn't matter, I only need to do X, Y, Z, I'm kind of lying to myself and preventing me from being able to realize the things that actually make me money or cost me money. And then I'll never progress, I'll never improve, right? But if I hold myself to a high standard, I push myself, right, to trade within my limits and to do the thing that sucks, then ultimately I'm going to see a lot more progress and I'm going to be able to take like kind of steps up the ladder, right? Because the trader who you are right now doesn't have to be the trader who you are in a month, 2 months, right? 70 days, right? That 72 days magic number. It doesn't have to be that individual, but you'll be that same trader if you don't choose to be accountable to yourself, right, over why you're making certain decisions. So yeah, it's been a bit of a long rant, right? But for me, it is such a position sizing thing. It is so important because if you're not giving yourself time to survive your mistakes and you have an emotional reaction to each mistake, then you just get into this pattern of constantly just compounding to the downside instead of compounding here to the upside. And it's a really disappointing place to be as a trader. It's so frustrating, right? Because losing a trade stings enough, but losing a trade and having an emotional reaction to a loss, it's double the pain, right? And once that pain starts to get irrational, I no longer make good decisions. I appreciate you saying that, Lee. It's the hardest thing to accept. It's the hardest thing to accept as a trader, that we have to be the tortoise, not the hare, right? And I will say this for myself personally, right? I think one of the reasons why, like, everyone has drawdown, right? Everyone has bad runs of form. Everyone has times where the strategy maybe doesn't work as well as they want. But there's a reason why I think a lot of, or like the reason why I find it easy to recover from periods of drawdown is because I don't have an emotional attachment to that P&L, because the number in itself doesn't move the needle, right? So there's obviously like a mental toll to taking X amount of losing trades in a row. There's a, like, the self doubt, the self talk becomes extremely negative, right? It doesn't feel good. But by keeping it small, right, I never get that like emotional impulse decision. I shouldn't say never. I had one last week, but I never get those like, or I get a lot less of them. I think it's probably the best way of describing them. I get a lot less, right, of those like, oh, I need to make this back here right away, right away, right away, because I have so much evidence here in my trading journal, in my trading history, that I can always bounce back from those decisions. I can bounce back from those types of mistakes. Whereas I have very little evidence of when I oversize positions and like average down or ignore stop losses or do whatever, that it creates a period of sustained success following that. Right? I pretty much never recover. At some point, I give it all away, if not more. So the only way that I can consistently bounce back is to, again, start everything from a position sizing perspective. And yeah, this has been a dreadfully boring session here so far. So I apologize, guys. I think I said this yesterday, but it feels like the market is priming for its volatile move as I'm driving across the country. Yeah, 100% Cole, right? We get paid for our decisions, not our time. The market doesn't pay me a wage just for sitting and watching. It only pays me if I make good decisions. And sometimes the best decision is to, yeah, be in your second most profitable trade, right? My second most profitable trade is sitting on hands, which sucks. But hey, that's what it is, right? Oh, excuse me. So a catch your breath day here at these highs. I appreciate that, Mark. If we're hanging out here at these highs, right, and price action kind of just consolidates here, what does that maybe set us up for tomorrow and Friday? Or like, what would be the most likely outcome potentially? Most likely outcome potentially is a bit of an oxymoron, but what does that maybe set the market up to do? Yeah, right. It sets us up for potentially that breakout trade. Call it like an ascending wedge breakout, right? So consolidation under support primes us for that big pop up and over eventually. And the longer the consolidation, generally the bigger the pop. So yeah, if bears aren't able to punish bulls here, then yeah, probably sets up for a breakout trade. Like I said, it'll be Monday to Friday next week. That's when the market's going to run again. Next week, I'm unfortunately driving across the country. So I'm doing my move. And as much as I would prefer to be streaming and trading, I got to do 10 hours behind the wheel a day. I got a 50-hour drive ahead of me. So for everyone here who's on the like month to month or join through Whoop, you guys will all get 7 days added to your subscription. So I'll make sure it doesn't cost you guys anything. Oh, it's gonna be great, Cole. I'm looking forward to it. Yeah, I mean it's gonna be great. It's gonna suck, but it'll be nice to drive across the country, get some nice pictures. So I was thinking about. I'm gonna run this by you guys here a little bit. I've been thinking about like a cadence for the stream and a way of like kind of managing mental capital. I think to a certain extent, right? Managing stress and like all these sort of things. And the way that I'm kind of looking at it is once a quarter to basically take a couple days, review, refresh, recharge, and like rebuild. So every 3 months, take 3 or 4 days off, and kind of have like a consistent process there. That would be that's kind of what I'm thinking a little bit out loud. It's not that I necessarily crave to take holidays, but I think sometimes I think it's easy to not realize how burnt out you actually feel until you have like a moment to just like catch your breath and like relax for a little bit. I think it's very easy to like get addicted to that feeling of suck. And I think from just thinking about it personally, like those are generally the days where my mental capital, right, is like at all-time lows and I'm more likely to make mistakes and to do all those sort of things. I have like a little bit of a guilt of taking time off. I'm like, oh, I got to power through. I got to power through. And unless there's like a big sporting event to go to, where I got like a friend's wedding, I don't really don't take too much time. So again, like trying to think about ways I can be proactive, right, not reactive. Because if you lose your ability to maintain your composure, doesn't matter if you're watching the market or not. Like you're not going to make any money anyway. Say that now. I will. Can't imagine I'll actually do it. So yeah, pretty boring session here, team. No volume, no enthusiasm. Yeah, correct, Marco. Yeah, correct. I start my drive on Friday. I get access to my place on Thursday, and then internet gets installed on Friday. So unfortunately, just a little bit of a period of transition. So I do apologize. Yeah, that would have been a really nice fake out, Rusty. Oh, boring. What a life I live. I say this is boring, but I'm thinking like I studied to be a lawyer, so I could have been reading case law, making sure that the comma's in the right place instead here today. I'll tell you what, that sounds far less exciting than just watching paint dry. So it could have been a lot worse. I don't know if it's a huge mansion, but it'll be a nice place. By the lake, so it'll be pretty sick. Yeah, it's pretty gross PA, Robert. Yeah, and it's all ridiculously expensive. Not particularly, Mike. I'm not a huge seafood guy. Oh yeah, I mean it's gonna be epic. It's like right by. It's called Alta Lake. It'll be nice. The Yeah, Alta Lake. The thing that I'm looking forward to most is the house has a sauna, so I'm gonna be able to yeah, sweat out my demons, torture myself in the hot chamber after a tough day. That I'm really looking forward to. So, I mean, I'm saying this a little bit like tongue in cheek, but maybe we could play a bouncier off of this opening range, right, for a move back up towards those highs. We need to see this candle close pretty strong. That's probably like the only possible setup trigger I have here. It's not a great one because there's not a ton of range to the upside, right? So getting the appropriate risk reward here to justify taking this position is not going to be easy. Actually, maybe a little bit more than I expected, but it's still not going to be easy to justify. What is going to be great about that spot? Sorry, I'm making this the Michael show here today, but there's like a 10-kilometer hike that you can do around it. And boy, oh boy, is the dog going to love that. So, like where I live in Montreal, I live at the base of Mount Royal, which is like the big park here. And so he gets his walks there, every day when I'm in town. And yeah, having a variant of that is going to be epic. Yeah, I think in Whistler, Robert, probably the biggest thing to worry about is the bears. Bunch of black bears that are just a little bit too used to people. And these candles didn't really close strong enough to give me a good opportunity for the aggressive entry and not really pulling back enough to give me the pullback entry, right? I would need a pullback here right into like 1920. Need like a great Gatsby pullback. Sounds good, Alan. Have a great day, man. Talk soon. So again, now potentially watching here for like some of these 10-minute signals. We get a close, strong close, right? That then sets up me for a possible like support type bounce trade. But yeah, kind of a nothing trading day here. And this is why we look at the VIX, right, on a daily basis. So we can look at what the implied daily move is, see how much of that move has happened, and almost like not overestimate, right, bullish power. So the implied move here on VIX is about 1.5% here. This morning we were up, almost 3. So for us to get more bullish enthusiasm, really, really challenging. So good prep here today. Not a very fun session, but our prep prevented us from losing money. So kind of like deja vu to Monday. And just, yeah, classic. Market doesn't want to move the week you want to see it move. Classic. This would be a pretty speculative. It's a little inside bar. I mean, could be in play here. So I will watch this carefully, right? Carefully. Going to set up my order. Looking for an entry around that blue line ish, right? And I'm going to have, let's set this to be the correct coordinates here. Okay, right? So that the difference between the blue line here and the red line is $500, right? With one contract here on NQ. So if I can get a deeper pullback, right? We'll say to like 910, for example, then I'm going to have soft or a mental stop loss here at 995.75 and a hard stop loss at 85. Right, so I'll buy the pullback, give myself that $500 worth of risk, one contract, right? And if it doesn't behave correctly, I'm going to try to get out before 995.75. Otherwise, I'm going to have enough buffer to hopefully survive a fake out and push back up towards 164. Does that make sense? Um, it's a good question, Bergs. I think it's one of those differences that is easy to see in hindsight, not necessarily in the moment. I would say it's maybe like a little bit galaxy brain to start to think that I can identify the difference intraday. I'll be honest, it's something I put a tremendous amount of thought into, which is why I'm kind of struggling to give you a very good answer. So let me sit on that for a little bit. Not necessarily. like probably the most, like when I would think of like a short covering move or a long covering move, I would view it more as like a single candle capitulation type scenario. So where you get like that mega volume sell off dump and then doesn't sustain further. That would be probably more how I visualize it. But yeah, I got to think about that a little bit. It's a good question. So again, I'm still going to watch for this for a little bit. But I'm not in a huge rush to make a trade here. And about 25 points to go here. So again, right, from an execution perspective, the way I am setting this up is I am setting my stop loss to be a $500 loss, right? So instead of typing in 18,995.75 as my stop loss, I'm entering 500 bucks and I'm looking to time that entry under that blue line. And if I can cut it before it hits 500 bucks, right at that red line, good. If not, I'm happy to try to take that risk and see if I can survive a fake out. But I'm not going to be in a huge rush to jump into this, right? As this thing pulls back. So let's see if I can get like an appropriate discount to give myself more buffer. And the deeper pullback I'm able to purchase here, right, the easier it is for me to just get green from even just like an overreaction bounce right off of these lows. So I've done such a good job here of being like patient and deliberate, right, and not rushing into anything. So I'm not going to ruin all that progress by just like jumping into the first impulse I feel. And we'll see if we can get that opportunity. So starting to watch here. Again, one contract only. Okay, so again, still watching here. And be a one contract play, guys, right? One contract. I would say if I'm visualizing it, I'm looking for a bounce basically off of that opening range high, right? To the top of the green box. Make sense? Okay, watching closely here. All right, guys. So I am in 1907, actually 1909, sorry, 1909 long. Okay, so let's see if we can survive that fake out. Okay, so let's see if this thing can go. Got maybe a little bit of slippage there on my entry. Okay, so now let's see if this thing can start pushing, right? We survived the fake out, so the execution plan definitely worked. But now let's see if this thing can push higher, right, and give us a nice P&L. Beautiful. All right. Oh. Okay, maybe not a perfect entry, but hey, the plan worked. So now let's see if we can get that follow through here past that green line. That's going to be kind of the next buffer point. And then go from there. So pretty good here so far. All right. So, oh, well, I took a stop there. Wow. Holy fuck. Where did that come from? Whoa. Wow, that was some blush. Crazy. Wow. Can you rephrase that, Rajat? I'm not sure what you mean. I should have had a bigger fake out buffer. Is that what you're saying? Or it should have been a larger loss. Is that what you're saying? So there's definitely a little bit of slippage on that order, but my hard stop loss was set right at 500 bucks, risking $500. So let's see here. Yeah, so it's just a market order flush. I took 663 on that. 663. So approximately 33 points. No, I didn't say that, Roberto. It's on a stop loss, right? You get out with a market order. So that's why you're expecting to get some slippage. A very interesting dump. Opens up that window for some more volatility, though. Give this 2 minutes. Remember, guys, there are going to be multiple things here that determine, right, what type of execution you get there on your price. Right, you're going to get a different fill if you're trading a sim funded account versus a live account versus a eval account. So there are an unlimited amount of variables that are going to influence your execution price there. right? Even like the Q. Well, I would call this now a red to green reversal, right? A kind of a mean reversion breakout instead of an opening range look here, Sammy. Yeah, that trade was nasty. What entry price did you get, Rajat? What was your entry price? Okay, so still looking here. Have to be the pullback technique. Okay, so my entry was 4 points better than yours, right? Or 2 points better than yours. There's that $40 difference. So we got to make sure, right, that we're comparing apples to apples, not oranges to oranges. There'll always, or apples to oranges, there'll always be differences then, right? Main problem here, right, is just the position sizing that would be required to execute this trade, right? I would like to be within 25 points of that high, which seems unlikely to set up there within that context. So a shorter time frame is probably more likely to give me the appropriate position sizing than maybe the 10 here. If the 10 on the aggressive, I can't take that trade. That was a very interesting flush. Maybe. I don't think I'm going to get a 400-point move. But okay, ES, right? Or sorry, NQ starting to set back up here. Be the same thing like I did last time. All right, so this give me an approximate reasonable position sizing. So I'm looking short here again, team. Looking short. Okay, I am in average price 18,920.50. One contract. So same thing. Yeah, 18,920. Cool. All right. So let's see if this can keep flushing, right, and breaking down. Has a good chance here to now put his green on the day. That is green on the day. So let's see if this thing can keep pushing lower lows. This pullback doesn't feel great. Flush, baby. Come on. Come on. Keep pushing. Keep pushing. Get under 900. You don't want to see this here retest my entry price. Okay, come on. Sell off. Sell off. Sell off. Come on, die, die, die. All right, guys, I've been stopped out there. I have been stopped out. That's a little bit frustrating. I should have taken that breakdown when I had it. 510 on that loss. So stop loss conditions here, right here, right? In NQ short, 18, 9, 20, 50, one contract stop at 935.50, hard stop at minus 500. So the instructions are right there and then. I am unsure how that is not clear. Do you see the instruction, Rajat? Do you? Yes, no, maybe? We did the exact same thing we did on that first trade, right? It was the exact same process. So do you understand what we did? It's a yes or no. I wrote my plan out, I think, very concisely here on my screen. So it's yeah. So again, a little bit annoying to get faked out there. But I should have taken my profit when I had it. I didn't do that. So that's where the mistake is. So I was up $750 on this trade. It would have been a nice green day. Didn't take it. Got greedy, maybe. I didn't close this maybe as early as I could have. But yeah, just in general, team, right? We got to stop looking for these. Like, I'm not lying to you guys, right? I tell you what I do. I write out my plan. I'm sharing with you guys what I'm doing. So it's quite frustrating. It's tough to be called a bullshitter when I'm losing money. Like it's really unfair because it puts me in an impossible situation, right? It's like if I don't lose as much as you, I'm the bad guy. If I make more than you, I'm the bad guy. Like it's an impossible situation, guys. So yeah, tell you exactly what I'm doing. I tell you exactly my position sizing. I tell you exactly my entry price. I tell you exactly my stop loss plan. Don't hold that against me. I can't win then. Yeah, but the plan was written out on my screen, right? So I don't know how else it could be more clear than that. And yeah, you did call me a bullshitter on the first trade. So yeah. Okay, maybe an opportunity here on this 3 min. Oh, I can't believe I got shaken out of that. That's so frustrating. So, guys, no one to blame here, right? We're not playing the blame game. I don't want to see any of that stuff in the comments. That's not fair. But when I take a loss and it's not the same number as you, that doesn't mean I'm lying to you, right? If I take a win and it's not the same number as you, that doesn't mean I'm lying to you. We have to get over this. It's ridiculous. It's an impossible situation for me. You can call me whatever, guys, but don't call me a liar. It's so unfair. Yeah, I feel a little bit frustrated to have gotten shaken out of that win, but that's okay. We got the volatility back on the menu here, so I still have the opportunity to take a trade. Like, no one ever complains when they make more money than me. But the second those reversals are changed, then I'm a liar. It's impossible, guys. Freaking impossible. All right, so still watching NQ here to the downside, 5 minutes. And this would pretty much have to be where the entry is. Right, above 825, so you have that 25 points to 50. And then again, right, any discount you buy on top of that, right, that is the extra buffer. So hard stop loss, minus 500 bucks. Mental stop loss, 18,850. Entry above 825. One contract. Okay, so watching closely here, right? Like I said, above 825. So watching closely here, watching closely. Okay, I am in. Average price, 851.25. Short. and I took the stop. All right, guys, I'm done. Have yourselves a great day. See you tomorrow.